Hello traders, welcome to today's lesson. So in today's lesson we'll be discussing what is market structure, we'll be discussing why does price move in trends, we'll be discussing how to identify trends, uptrends, downtrends, ranging trends, we'll be discussing what exactly is ranging or consolidation trends, we'll be discussing why exactly does market change trends at all. So in our previous lesson we learned how one candlestick to identify a particular candlestick, what is the autonomy of a candlestick, but a candlestick cannot tell you the exact price movement, right? It doesn't give you the full picture. Rather, it's a collection of candlesticks, and a collection of candlesticks is what we call market structure, right? So a collection of candlesticks that works together tells you, oh, this is the direction of the market, which basically is what market structure is about. So what exactly is market structure quickly? Market structure basically just tells us price movement. That is the movement of price in a particular direction or in a particular time frame. Now, let me show you. Let's go right into the structure. Now, why does price move in trends? Price moves in trends because price moves in trends. Because buyers and sellers are always involved in the market. Market is always active, right? So that's why price moves in trends. And now, what are the kind of trends we have? We have the uptrends, which traders also call bullish trend. That is, market is always moving to the upside, as you can clearly see. The other kind of trend we have, so we have basically three kind of trends. We have the uptrends, we have the downtrends. This is downtrend here, where market is moving, like you can rightly guess, to the downside. This is moving bearish. Market traders call this bearish movement. Then lastly, we have the consolidation trends, or traders also call it the ranging trends. It's in a particular range. I'm going to explain each and every one of these trends one by one so that you can easily identify them, and in future lessons we would know also what to do with each trend. So for the first trend that we have, which is called the uptrends, right? The uptrend. Why is it called uptrend? As you can see clearly, the market is going to the upside. If you pick your trend line tool, a video I've explained how to use your tools is on this particular lesson also. Your trend line tools, and you draw them to the bottom of this, to the end of this trend. That is, you draw them to the end like this. You find out that it is towards the upside. It won't be facing downwards, it'll be facing upwards. At the tip top and at the tip end is facing upwards, so it's an uptrend. Whereas in the other side, to the downtrends, if you draw them, it will be facing downward. Basically, this is just a way to identify, oh, it means it's a downtrend or it's an uptrend. And like I mentioned, as a trader, you want to use trading terminologies, right? This particular trend, which is called the uptrend, is called bullish. So if you hear people say, oh, the market is currently bullish, don't be bamboozled by what they are saying. It just means they're saying the market is going to the upside. You say, oh, the market is currently bearish, it means, oh, market is going to the downside. You say, oh, the market is ranging, it means it's just in a particular range, right? It's not giving you the uptrend. It's a ranging trend or consolidation. So it means that if you pick your trend line tool on that particular trend, it won't go to the upside or to the downside. Just give you something like an horizontal parallel line, right? So that basically explains the three trends that we have. First trend, the bullish trend, market is going to the upside. Second trend, market is going to the downside, that's the bearish trend. And the third kind of trend we have is ranging trend. Now, let me explain something quickly. I want to explain what we call the swing high and the swing lows that you'll be able to use to identify each and every one of these trends. But let me leave the screen. So, swing high, what is a swing high and a swing low? So in price movement, right, don't forget we said just one candle cannot tell you the entire story of a particular market movement. It's a series of candles. Now in price movement, let me assume this is a candle opened at this point, closes here, and that candle opens at the same point, closes here, and that candle opens at that point, and closes here. Now this is what we call a full swing. A full swing means we have an open, a close, another open, another close. And what exactly does that tell you? It tells you that, oh, the market has done a full price movement that you can use to identify the kind of trend it is. Are you with me? Although just this cannot tell you the exact trend, because trend obviously means, oh, it's going in a particular direction. But a swing just means it has a high, a low, and another high and another low. Now if this comes down like this now and goes down like this, oh, it tells you that market is about to do a bullish trend. Why? Because you have different kind of what? Swing movement. I think that's clear, right? Now if it's a bearish movement, you find market open here, close here. Bearish means it's going to the downside, right? Now it's going to close at the downside, like that, like that, like that. Now there's also something you need to also note in this movement. If you look at this particular trends well, you find out that the end of the trends, that is the bottom tip of the trends, right, usually close higher than the previous one. That is, this particular one closes higher than the previous one. This particular one closes higher than this one. This particular one closes higher than this one. And that's why that's another way to identify that it's an uptrend. So if it's a downtrend, it won't close higher than the previous, rather it will close lower. So this particular one opens here, closes here, opens here, it closes lower than the previous one. Can you see? So that means it's going to the downside. So when you come to your market view, or you come to your trading view, and you see a particular price movement, what you should identify, you can use your trend line tool like I just did in this place to identify, oh, where is the particular direction of the market. And if you don't want to, draw lines all over your market, you can just check where is the end, where is the bottom ends of the market. You check the bottom end. Okay, this is where market closed here. Oh, the next end is higher than the previous one. I think it's going to the upside. Once you can confirm it in 3 places, then you can easily say, oh, it means that this thing is actually going to the what? To the upside, and that means the market is currently bullish, right? And this is just basically what we mean by market structure. Like I said, market structure is what? Price movement. The movement of price in a particular time in a particular range. Now, the ranging or consolidation trend, you find out that the market doesn't necessarily go lower or higher than the previous one. Can you see? So just on the same range, it's just ranging. And this is one of the most confusing trends for traders, because they don't know what market is doing. It's not breaking any high, it's not breaking any low. But here we'll find out that in the uptrend, there is the previous high is broken, the previous low is kept intact. This previous high is broken by this new high, the previous low is kept intact. This previous high is broken by this particular high, this one is kept intact. Same thing goes for this one. While for the bullish trend, let me use this particular one. For the bullish trend, right, the previous high, right, is kept intact, but the previous low is broken. Let me go to the market, you see what exactly I'm talking about. The previous high is kept intact, the previous low here is broken. Previous high is kept intact, right? This previous low is broken by this one. This high is kept intact, that means it is not broken. That means the market did not exceed this high, but this one is broken, right? And that exactly is clear about the bullish trend, the bearish trend, the consolidation trend. If you have any question, you can ask in the comment section. So right now we'll be going also to how they are basically tagged, right, which is quite simple. So for the bullish trend, we have what we call the HH, called the higher high. Let me write it in full, so that I'll just write it in full once, and then it's called the higher high. So they say, oh, if you hear traders say market is creating new higher highs and new higher lows, they're basically already telling you that market is creating So I've identified them as HH and HL. So if they say, oh, the market is creating new higher highs and new higher lows, it means the market is most likely in the bullish trend. So these are just ways to identify the bullish trend. The first we have shown you is using your trend line tool. If the trend line tool is facing to the upside, you are safe to say it is a bullish trend. Also, if you find out that the previous low was not broken by the next low, it can be a bullish trend. This is the previous low. It was not broken by this. It means market did not exceed this. The previous high rather was broken. So now that's where we'll be getting into other lessons where we'll talk about break of structures, but that will not be in this particular video. So what exactly is this high? It means market opened here, created this higher high, created this higher low. Now this is another higher high. Now if the previous higher high, now pay attention here. If the previous high, or if the recent high rather, is higher than the previous high, it is clearly a bullish trend. What do I mean? Market starts from here, right? Creates this high, creates this low. We don't know if it's an high or high low yet. Now the next movement, and that's why we learned about swing earlier. The next swing, this particular swing, will tell us if it's a bullish trend or a bearish trend. If this particular swing goes up and overtakes or goes higher than this high, it means it has created new higher high, and a new higher high that is higher than the previous higher high already indicates what? A bullish trend. This is a new high, this is a new HL, that is higher low. So these are those terminologies to know as right, as a forex trader. So when you hear traders saying, oh, higher highs and higher lows, what do they mean? They mean, oh, this high, this low, this is a new high above this previous high, a new low, although it doesn't exceed this previous low. So a bullish trend creates new higher high and higher lows, high lows, high lows, high lows. But when we come to the bearish trend, it's a different ball game entirely. In a bearish trend, we call it a lower high and a lower low. Basically because market is bearish. Lower high, and lower low. So now, because market is bearish, it is going to the downside, the lower side, right? This is lower high, this is lower low. Now the next lower high, for us to confirm that it's a bearish trend, the next lower high must not break the previous lower high. Can you see? So this is the next lower high. It doesn't break the previous lower high. The next lower high doesn't overshoot the previous lower high. The next lower high doesn't overshoot the previous lower high. And that's how we identify that, oh, okay, I think we are in a bullish price movement. Right? This is another lower low. Why for the ranging, we just have highs and lows, highs and lows, highs, lows, highs, lows. Do you get? So these are the ways to identify a market trend and market structure. I'm going to leave the screen like this, in case you just want to see them once again and probably take your notes. Right, so that is how to identify a market structure when it's going to the upside, to the downside, and when it's also ranging. So obviously, if market is creating new highs and new lows, that is new higher highs, new higher low, higher high, higher low, one thing it tells you is that sellers are beating in the market. That is, buyers are involved, or buyers are very, very strong, and that's why it is called bullish. It tells you, oh, it means buyers are very, very active and interested in this particular price movement. It means, oh, when buyers get to this point, they tend to buy the market again, turn to this point. And that's why in our previous lesson we mentioned that a candlestick just tells you the story between a buyer and a seller, or what buyers and sellers are doing at that point. But one candlestick cannot tell you the entire market story, and that's why we are doing a market structure, which gives you the combination or the coming together of different candlesticks. So it tells you that for a particular range or a particular time frame, buyers and sellers were involved in that market, and the particular movement of that market will tell you who had the upper hand. So if a market structure is creating new highs and new lows, to the upside, right? It's telling you one thing: buyers are very, very much involved and controlling the market. Whereas in a bearish trend, you can easily tell that it means sellers are the one dipping or selling this market. These are just basic knowledge to just know as a trader, so that you know that, oh, in this market, so that you won't be buying when the sellers are involved. For instance, imagine you see that this lower high, we'll get to that in other lessons, that's created new lower highs. You wouldn't just say, oh, you want to buy up to this point, because you know that sellers are still involved in this market. Market is going to the downside, so you can easily tell that rather than buying, I should sell. That's just basic knowledge that will come in handy later. So when you know the overall market structure, right? Why does market structure matter before looking for entries? It matters because if you know the exact way price is moving, and that's why we don't like saying we are predicting market. We're just saying, okay, we are following the market trend. So when you know why or the way the market is moving, right, you won't be chasing the opposite direction. For instance, imagine I enter into a market and I see that I've seen this I created, I've seen this I created, I've seen this I created. I know that buyers are involved in the market. It would be unwise for me to imagine I miss the market at this point. So, but unwise for me to say I want to sell even down to this point, because the market can just come here and decide to buy again. Why? Because buyers are still very much involved in the market. Yes, you can say, oh, you are waiting for it to come. Yes, you can say, oh, you are waiting for it to come down to this point. But understanding market structure, you know that it is better safe to follow the market trend. So I rather wait for a good place to buy at this point and just continue buying with the market. Continue buying with the market. Rather than looking for a way to counter, we call it counter trading or counter trend trading. Same thing with the bearish movement. If I see that, for like a couple of days, the market has been bearish, that is, sellers are in control of the market, that has been creating lower highs and lower lows about 3 times. I know that when market is most likely going to come to at least this point. So if I see a new lower high created at this point, I rather sell this next lower low rather than, market is coming down and then I'm buying to this other side. So if you don't understand your market structure, you'll be entering market at the wrong time and you'll be missing out on a lot of things. Do you get? And also, it seems as though I've been sidelining the consolidation market. It is not necessarily it's not to be sidelined, because sometimes the consolidation market just tells you where liquidity is being formed. We'll get to liquidity in other lessons. Liquidity means money, where money is being accumulated. So the ranging market just shows you that, the market has been ranging at this point. So it could either go to this downside or it could go to the upside. Now, and when it goes to the downside, it just tells you one thing: all the money stacked up here has been taken out, and you can have market now go back down and come back up. We'll get to that in other videos. Right. So in today's video, you just see what exactly is market movement, market structure, and right now I want to explain why exactly does market change. Right. What causes market change? Why do we have the bullish trend and the bearish trend? And if you guess right, it's just based on emotions. I think I've explained this in a particular video where I said market movement is just based on the people involved or the institution involved, their emotions and their greed, right? So greed moves the market, price movement the market, news moves the market, different things moves the market. So I've explained that before. And so how do I identify a trend change quickly? A trend change. You already know what a trend is now. So let me assume market is moving towards this side like this, right? Market is moving now. What trend is this? What trend is this? You'll be right if you say it's the bullish trend, because it's creating new high highs and new high lows, right? But sometimes you'll find that market does this and then comes like this. Now don't forget, we said that how do we identify a bearish trend? A bearish trend is when the previous high is not exceeded, rather the previous low is now exceeded. you see here, this is the previous high exceeded by this high, exceeded by this high. It tells you that, oh, this is a what? This is a bearish trend, right? But then when we get to this point, we find out that, oh, it seems as though market is about to change trend, and then the previous high is no longer exceeded, rather the previous low is now being exceeded, and that's when we identify it as what? And that's when we identify a bearish trend. So, and this is basically the way price moves. Price does not just go in one direction. Price always moves in the higher trend, lower trend, or in the ranging trend. And this is why market structure is very, very vital and important. So when price is moving like this, it tells you that, oh, when you see, the moment you identify this place taking out, the moment you identify a lower low taking out, it is exceeded, watch out. The market is most likely about to change its trend, unless in some other situation where it just wants to take out liquidity and continue. The market is most likely about to change its trend and then become bearish. So if you don't understand your market structure, you would think, oh, well, this is just a mistake, and then you would want to buy up to this point again, but then market goes up to this point and then takes you out. This is why market structure is very, very important. Do you get? So in trend change, we'll be talking about the smart money concept, talking about liquidity grab, liquidity sweeps, talking about different things, but that will be in other videos, right? So now that you know how to identify market direction, the next question to now answer will be, where exactly do I now enter from? Where exactly do I now start looking for entries? And that's what my next video will be about. How do I now know, oh, since I know that this market is already going up, and let's say I make the market at this point up, should I just buy from that place, or I should wait till the market comes here before I buy? That one next video will be about. But before we go to the next video, let me show you market movement on a real chart. So as you can see, right, how do I know this trend movement easily? Just pick your trend line tool. Let's say I'm starting from that point. Oh, it means it is currently going up. This is a full swing. Market started from this point, made this swing. This is the lower and the higher low, right? The next higher high, higher low, higher high, higher low. But if you notice here seems like a consolidation. Here seems like market is just ranging. From the moment you made this higher high, it seems as though market is just ranging, right? It did not really do much movement until we broke this low. That means market has become bearish. Can you see? So this is basically how to begin to identify market movement and to know, oh, when do I enter the market and when do I leave the market? When do I leave price? Where do I set my price? And this is why it is very, very vital to identify market structure. So in my next lesson, we'll be discussing how to identify market movement. Rather, we'll be discussing where to enter price, when to enter, discussing support and resistance, and discussing how to pick your trades. Alright, take care of yourself. See you in the next lesson. Subscribe and like the video and put on your notification. The voice of God did, and God bless.